Welcome to Trading Nation. I'm Mike Santoli. Stocks seeing a big reversal Friday afternoon after Treasury Secretary Steven Mnuchin said trade talks were constructive. Still, the market's posting the worst week of the year amid trade uncertainty. So should investors expect more selling to come? Craig Johnson of Piper Jaffray and Steve Chiavarone of Federated Global Investment Management join me now. Craig, detail your current snapshot of the market, where we sit a few percent below those record highs.
Right, Mike. So when you look at the chart of the S&P 500 we brought in today, this is a chart setup from our perspective that looks like almost a triple top. It looks like perhaps even a head and shoulders top. But more importantly, as you look at the internals of this market, they continue to get worse. And we're having some flashbacks to something very similar to what we had seen happen back in September. So from our perspective, we think that we're ultimately going to see the next 5% of this market is probably to the downside, not the upside, and think that we're probably going to get support to come into play around 2650. I will tell you, Mike, we're still sticking with our call, which has been a range-bound market for 2019, 2500 on the lower end, 2900 on the upper end, and close the year around 2725. So this is kind of playing out like we've been thinking so far.
All right, yeah, so that further downside you're talking about, another 5%, would not be as deep or as sharp as the fourth quarter pullback, but definitely noted in terms of that trading range call. Steve, how are you playing this here? Obviously, stocks had a great run going into this little shakeout, maybe got slightly overvalued or people got a little complacent. How do you read it?
Yeah, I mean, look, I think the reaction so far has been measured because I don't think we know what we're in for yet. At the very least, we know that we've gone from kind of the 9 innings to the extra innings in these negotiations. They don't look like they're over. We still think the base case is there's a deal. Look, is the upside in the short run probably capped a little bit? Yeah. Could we have a 3 to 5% or even a little bit deeper correction? Sure. But ultimately, we think, unlike last September, the Fed's on the right side of this in pause mode. Economic data looks a little bit better. We don't think that we're in danger of kind of retesting the lows or anything like that. We've got to pause, and we think ultimately we get a good resolution and move higher into the end of the year.
Okay, so you think that basically when this gets sorted out, you actually think trade's the most decisive thing that would allow the market to get back up to new highs?
No, I think the most important thing was the Fed. The market really reversed course in its downdraft earlier this year when the Fed, switched from kind of a hiking stance to a more dovish stance. We think that that's what's really been priced into the market. Trade could be an accelerant and get us to our 3,100 target by year end. But we think, where we sit today, this is mostly just pricing in the Fed. We never subscribed to the idea that a ton was priced in terms of trade.
All right, 3,100, not too far from another 10% move higher. We'll see which way this breaks. Guys, thank you, Craig and Steve, for joining us today, and thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.